Hello and welcome to another video on how to secure yourself financially. So in today's video, I'm going to take a look at the beginner guide to financial statement from the SEC, okay, the Security Exchange Commission. So they have on the website a section that describes about this financial statement, what are financial statements after all, as well as the different type of financial statements and other things that are relevant to them. So in the last video, what I did is just once I learned how to articulate, how to talk about and understand deeply, instead of memorizing about what are financial statements and the different type of financial statement, balance sheet, income statement, cash flow, and statement of the shareholders, as well as the importance of read the footnotes where you have things like accounting practice and principles of significant accounting practice and policies, income taxes, pension and any post-retirement programs, as well as the stock options, management and or the management discussion and analysis of financial conditions and result of operations, as well as financial ratio the investor use to evaluate a company. And this is something important, especially as a beginner on that. So over the couple past video, I look at them, I articulate them so I know what I'm talking about, and the point of this video is to write it down, is to not only to improve my communication skill but also my writing skills. So the last video was focused is on what is this financial statement, what this section focus is on this beginner part of financial statement, as well as the accounting. And they mentioned that if you're able to read nutritional label or baseball box score, you can learn to read the basic part of financial statements. And if you can know how to follow a recipe or apply for a loan, you can learn the basic of accounting. And the basic, there are rocket science. So by looking at the basic part of financial statements, much like the CPR course, this cardiopulmonary resuscitation, when they teach you how to perform basics CPR, that section focus on that, but it won't train you to be an accountant. Much like a CPR course won't train you to be a cardiac doctor. However, it can give you confidence when you're able to see a set of financial statements and make sense of them, which is the entire goal of this. So when you see a set of financial statements, you can make sense of them. And also, especially if you're going to be a business owner. All right. So after all, financial statement, they show you the money, okay, as I mentioned here. So financial statement, they show you the money. Financial statement, they show you the money. Okay, it's from the Cuba Gooding Jr. immortal lines from Jerry Maguire movie. It's a show me the money, right? That's what financial statements do, and we have 4 types of them. So we have balance sheets that it tells how much what a company owns, and what it owes at a fixed point in time. The income statement that show how much money a company spend or make to produce the good and service. Okay, how much money a company made and spent to produce the good and service, the cash flow that show the exchange of money between the company and the outside world, as well as the statement of the shareholders that show change over time, that show changing interest of the shareholders over time. In this section, from the beginner guide to financial statement here from the Sec.gov, okay, the Security and Exchange Commission, okay. So in these sections, they only talk about is the first three: balance sheet, income statement, and cash flow. So the first section here, the balance sheet, the TLDR, I'm gonna make here. So the TLDR, it is a snapshot of the company assets, liabilities, and shareholders' equity over a period of time. Okay, so this assets, after all, is anything that a company owns that has value, whether it's tangible or intangible. Okay, so for example, tangibles are inventory, equipment, property, plant, whereas intangible we have is patent, trademark, copyrights, customer relationship, goodwill. Also, the liabilities, which are obligations that a company have to pay off or to provide in the future for good and service. Okay, and generally this involved is uh, money borrowing from a bank, pay rent or rent for use a building, payroll company or payroll a company owns to its employees, as well as money owned to suppliers, taxes on to governments, environmental cleanup costs, okay, or good and service provide in the future. And this distinction is very, very important, at least just to mention is the most common example of liability. So rather than memorize each one of them, is to try to understand them. Okay, so when I talk about the liabilities, exactly it's like that. It's obligations that a company have to provide or pay off in the future. Okay, and that include is, yes, money borrowing from a bank, the rent of use or the rent for use of a building. Okay, of the rent of use a building, a company, the payroll or the payroll a company owns to its employee, money owns to providers or suppliers for materials, as well as money owns taxes owned by to government, environmental cleanup costs, and good and service to provide in the future. Okay, or promise of good and service to provide in the futures. So when I talk about the shareholders' equity, aka capital or net worth, so it's the leftover money that shareholders will receive if all of the assets were liquidated or if a company decide to sell all of its assets and pay off all of its liabilities. Okay, so typically you'll find balance sheets organizing following this formula. Okay, so you have assets, liabilities, and shareholders. Again. Uh, so by looking at the liabilities, and again, which is one of the aspect of the balance sheet, uh, which are obligations that a company have to pay off, such as uh, money borrowing from my bank, or the rent for use a building, the company or the payroll a company owes to its employees, as well as money owes to suppliers for materials, taxes owed to the government, environmental cleanup costs, and good and service to provide in the future, so, such as subscription service like Netflix or Spotify, for example. Okay, gift cards is another great example of that. So the shareholders here, which is the another part of the balance sheet, shareholders' equity, after all, is also called as the net worth or the capital, where this indicate the leftover money that shareholders will receive if the company decide to sell all of its assets and pay off all of its liabilities, right? So if a company decide to sell off, if a company decide to sell all of its assets and pay off all of its liabilities, the leftover money belongs to the shareholders, and that represent is the capital, or the net worth, or the shareholders' equity, the ownership of that. And you can represent this as a formula, like assets are equal to liabilities plus the equity or shareholders' equity. So generally, assets are listed based on how quickly they can be converted into cash. Yeah, so you have things like the uh, inventory, for example, or also known as current assets. So assets that a company expect to convert into cash within a year or less. Okay, uh, as well as non-current assets. So a asset that a company will take longer than a year to convert into cash. Okay, and you also have something called fixed assets, which are assets that are not for sale because it allows your business to run. And the other is liabilities, generally listed based on their due dates. So you have current liabilities, obligations that a company have to pay off within a year or less, or long-term liabilities that will take longer to do that, as well as the shareholders' equity. Okay, so this shows is the money that is the is this show is the money. This show is the amount of money owners invest on the company stocks plus or minus that is earning or losses since inception. And sometimes the company redistribute these earnings, and these distributions are called dividends, right? This money. But it's important to understand that concept of the shareholders' equity. So, how much money, as an owner of this company, I invest? Okay, how much money as an owner of this company I have invest in the company stocks, plus or minus it is revenue or losses since inception. And sometimes companies redistribute this earning, and this distribution or these distributions are called dividends. Again, this is just the first part, or the first uh, type of financial statement. And in today's okay, so in today's video, oops, and in today's video, what the hell is this? What the fuck you think you're doing, my friend? Okay, and in today's video, I'm gonna take a look and write it down, the income statement. But before that, let me take a look at this. So a balance sheet shows a snapshot of a company assets, liabilities, and shareholders' equity at the end of the reporting period. It does not show it doesn't show the flow in or out of the account during the period. Very, very important. It does not show the flows in or out of the account during the period. Okay, so it does. So balance sheet. So balance sheets doesn't show the flow in or out. Okay, here. So it doesn't. So it doesn't show exactly. It doesn't show the flows exactly. It doesn't show the flows into exactly. It doesn't show the flow into and out of the account. It doesn't show the flow of. It doesn't show the flow into and out of the account during that period. It only records one of them. It doesn't take in consideration of the flow in and out of the account during that period. Okay, so with income statement like this is now the income statement here. So with the income statement, with the income statement, uh, an income statement, after all, it shows you how much money a company made uh, at a given particular uh, accounting period. Okay, so an income statement report how much revenue a company earned over a specific period of time, usually for a year or some portion of a year. An income statement also shows the cost and spend associated with earning that revenue. The literal bottom line of the statement usually shows the company net earning or losses. And this tells you how much the company earned or lost over the period. So the TLDR of this is that an income TLDR of this, so it shows how much it costs and spend, or how much a company spend over a period of time to produce it is good and services. All right, so that's a TLDR. It shows how much money a company spends over a period of time to produce it is goods. To produce it is goods. Bienes y servicios. It is goods and service. Okay. So this statement show or the bottom line of this statement, the literal bottom line of this statement show you the net income, or this case is the show you the revenue or losses Okay, it show you the or the company. Show you the company net earning. Exactly. Show you the it show you the company. Exactly. The literal bottom line of this statement show you the company net earnings. The company net earning or losses during a period of time. So we can think of this statement as a set of stairs where we start at the top of the stairs with the total amount of revenue. Okay, and once you go each step down, okay, and then you go down one step at a time, then you go down one step at a time, and each step, okay, at each step, you make a deduction associated with that revenue. Okay, which is that at each step you sorry at each step you make a deduction associated with that earning. Okay, at each step you make a deduction associated with that earning. Income statement also report earnings per share or EPS. No. This calculation tells you how much money shareholder would is this. So then you go down one step at a time, and each step you make a deduction for certain cost or other operating expense. Okay, it's more straightforward. So at each step you make a deduction. You make a deduction. You make a deduction for certain costs or other operating assets for certain costs and operating other operating expenses. Exactly, expenses associated with that revenue. Okay, associated with earning that revenue, with earning that revenue. Okay, so this is how we can think of the income statement. Okay, so if I have to explain to someone else, it's like, well, you can think of that, you can think of this as a set of stairs that you start at the top with the total amount of revenue, and then you go down one step at a time, and each step you make a deduction for certain costs and operating expense associated with earning that revenue. Okay, so at the bottom of the stair, at the bottom, exactly at the bottom of the stair here, so at the bottom of the stair, after deducting all of expense, exactly at the bottom of the stair, after deducting all operating expenses, you can know how much money a company made or lose. Okay, you learn how much the company actually earned or lost. You learn how much the company actually earned or losses or earn or lost during that period. Okay, so generally speaking, here at the top of the income statement, okay, at the top of the income statement, you start with the total amount of revenue. Okay, so at the top of the income statement, you start with the total amount of revenue, and then you um, deduct things. Okay, they say at the top of the income statement is the total amount of is the total amount of is the total amount of revenue, or is the total amount of money brought in from sales or products or service. So the total amount of money from products is the total amount of money from selling products and services. Okay, this is the total amount of money. Okay, so for example, in my case, the income statement that I'm receiving right now per week is something is like per week. So working for this client is like 44.50 is this amount, right? So 666, like blah, blah. So this is the total amount of revenue per week right now. Okay. So at this recording, my total amount of money from selling my service per week, working 15 hours, okay, is 666.66, right? US dollar. Okay. So this represent is the total is the total amount of revenue, okay? The total amount of money from selling products and services, okay? So this recording, my total amount of money from selling my service per week, working 15 hours is this, right? Is 666.66, right? Okay, cool, awesome. By the way, awesome. Mm-hmm. Mm-hmm. So after I look at this, which is the total amount of money brought in from sell products and service, and in my case by selling this service, okay, all right, uh, then okay, I need to deduct uh, something that they mention here. This top is often referred as gross revenue or sales, okay, so this represents, so this, or aka revenue, gross revenue, okay, so this is my gross revenue, okay, and that'll be all for this video. So take care, bye bye.